Frank, hold it steady. I'm going to put the star on the top of the tree.
Hold on, let me plug it in first.
Whoa!
This holiday season, give yourself the gift you know that you've been wanting. A funded trading account with FX2. FX2 allows you to earn real profits on a simulated account up to $200,000. To start, select any of their one-step evaluations. We know things can get pretty hectic during the holidays, but you can take your time with the evaluations because there's no time limit to complete them. And with FX2, once you pass, they'll even refund your evaluation fee during your first withdrawal. You can collect up to 85% of the profits that you gain on your account. You can buy a whole lot of presents with that kind of money. Get funded with FX2 today and find the most wonderful trades of the year.
I'm coming, guys. I'm coming. All right.
Sorry, everybody. I was getting my coffee. It just finished. Sometimes I play this game where I get the coffee brewing and it has like 2 seconds between when it finishes and when the stream actually starts. I play this game with myself every single day. So thanks for everybody for being here. We are getting ready for PPI today. It is a big day in markets. As you know, everybody was looking at PPI yesterday, and it was honestly what I called probably the most important figure of the month. But we can't discredit the importance today of core PPI and PPI as well. This is, of course, the producer price index. And the producer price index is kind of up the supply line. It gives us a little bit more of a look at inflation readings, and it is very, very much important. So as we prep today, again, I'm getting my my coffee going here. I'm getting all prepped. I've got this thing where if you missed yesterday, I explained that my mug has this like auto, it heats the mug. It's really cool. But my parents gave it to me for my birthday, and I'm using it here. You know what? My parents also got me this behind me for my birthday. So both of these things. This is a clock that lights up. It looks really nice on the screen. But anyways, guys, we are here again for producer price index coming out here in just about 10 minutes. Markets are likely to be volatile during this time. Heads up, I am still in the S&P trade. I feel like a broken record. I say this every single day, but it is and has been my best trade of the year. We are up collectively between the two positions just over $40,000. It's crazy. Now, I say this every time because I think context is really important. I took several losses in October trying to find this entry. So I think context is important. I've shown my account statements several times on my channel. I try and be as transparent as I possibly can through the internet. And so far, this has been my best trade. Today, we'll see if that best trade gets threatened here. My stop loss is trailed. So if price comes down on this trade and we break through support here at the 4,600 level, that's going to go ahead and signal it's time to get out of the trade. We do have the Fed meeting later today, and we will be streaming for both this event and the FOMC decision and statement to follow. That should be an interesting, the press conference really is what will be market moving. But we'll be paying attention to that on the stream. We'll come back and do this live for the Fed meeting. So today, what are we looking at? Fed meeting is later, but currently we do have PPI. So this morning, I'm going to say this is probably a big indicator that will move gold, the dollar, etc. So I want to show you in terms of gold where we're at. Gold is still breaking through support. This is not looking like a bullish chart at this time, in my personal opinion. This is a tough one. I don't really have a strong bias, bullish or bearish on gold at this time. From a technical perspective, it looks kind of bearish, but fundamentally, I think it has upside. If the Fed is done with rate hikes, and they signal that today, I think that's the thing to pay close attention to. If they signal that they are truly done with rate hikes, that's going to be a bullish thing, I would say, for market sentiment and probably for gold as well. So we'll watch that later. But producer price index, same thing. It matters to gold quite a bit because, again, this measurement of inflation comes out in 7 minutes, 40 seconds. It's going to give us an idea as to whether or not on the producer side, up the supply chain, before it gets to your pantry kind of thing, and it sits on the shelves and comes to your pantry, right? Up the supply line, are those prices rising? And that can be an indicator that is really important to the inflation story. Okay, so couple things we got to do. We got to take a look at the dollar index. People are asking, is that a live account? Yes, it is. I trade on Webull. That is the brokerage I use. And also, I think that there is if you're a U.S. citizen, there's a couple other countries. I think it's like Philippines, UK, US. I think that's it. There's only Singapore as well. A couple countries that can use Webull. It's the broker that I use. If you'd like to use the same broker as me, we do have a referral link that's in the description, I believe. If you use that link, we'll both get free shares when you sign up. It's a nice referral program they have. You get free shares. I've seen people get $100+ in free shares, so it is worth checking out. Oh yeah, thanks, Chandler. Chandler's got us with the link. If you guys want to check out Webull, feel free to do so. But yes, these are live trades. No fake nonsense, no demo accounts, no MT4, nothing of that sort. Okay, so let's see what we can get into before the news. Again, I like to start usually with the dollar index. So dollar index has been under pressure. I pointed out yesterday that I think with the CPI number coming in cool as expected, I think we see the dollar continue lower. Now, that could be threatened today if we get hotter than expected PPI numbers or a Fed that seems more stuck on staying higher for longer. Those things could threaten the dollar bearish story. But I think inflation yesterday, and if we get more confirming data today, could continue to see the dollar roll over. Now, that's not a prediction as to what the spike is going to do today. I think it's very foolish to try and predict what a spike is going to do on news. It can be very, very sporadic and very, very hard to predict. So I don't really believe in doing that. However, if the fundamental story still seems to be the disinflation trend is intact, and as long as that is the story, I think areas of resistance like this are more sell side interesting in my personal opinion. Oh, that is good coffee. I think I hear Chandler or James getting some coffee now, so that's great. The kitchen, some behind the scenes kitchen is behind me. The team office is just outside of there. We got about 2,500 square feet here in Atlanta, Georgia. We're a team of 10 people total. We build software tools for traders. In case you ever wondered, what is this my house? And this is not my house. I work actually at an office, which is kind of weird, right? Not really the day trader style, but there's two sides to the YouTube channel. We build software tools for traders, which I'm sure you guys have seen many times. The EDGEFINDER is a software tool that our team has built. Speaking of which, while we're on the subject, I'm staying pretty true to this today. US 30, that's the Dow. I'm pretty bullish on. Oil still bearish. Actually wanted to check that for setups. Pound yen and pound USD was on here, but it's no longer there. And I took a long trade on pound dollar. Let's see if I can expose a not so great trade. So I took this trade yesterday in VIP. I share every trade that I'm taking inside of our Discord, and I am right sometimes and I am wrong sometimes. So right now, so far, it's not looking great, but we'll watch pound USD. I am long pound USD. Again, please do not copy. Please do not. This is not the purpose of the show, not the purpose of our service, anything like that. We're not a copy and paste service. I think lazy trading leads to losing a lot of money. So please don't do that. But I personally think that the pound has upside, although the EDGEFINDER was bullish on it yesterday. I think it lost its rating for some key detail. We could go look at it in detail. But what I want to point out is even if pound USD is not on there, look at pound CAD, pound Aussie, pound yen. We're getting some nice confirmation across the board. Seems like institutional money seemingly flowed into the pound. Actually, I know that. We can go check pound USD. I know pound was really bullish. Yeah, look at this. Institutional money flowed pretty hard into the pound, up 7.84% week over week. That's a pretty meaningful non-commercial move in the commitment of traders data. That's meaningful. So we have that info here. Hey, Dan, what's up? Good to see you in the chat. Dan is a EDGEFINDER user, fan, and has a wonderful social media himself. So if you guys aren't following Dan on Instagram, it's Dan Emerson. It is highly worth the follow if you're a retail trader. If you're a retail trader trying to get into the fundamental side, trying to get into the depth side, then absolutely one of the better traders to follow out there. So, okay, guys, we've got just a few minutes to go. PPI, Producer Price Index. We're going to watch to see if numbers are cooling. If this number cools, same general premise for me as yesterday. If we get cooling numbers, that's going to keep the dollar bearish story going for now. And if you get some sort of surprise, some sort of hotter than expected, this could give a little bit of a pop to the dollar. Now, again, I think that the big market mover today is going to be the press conference later today with the Federal Reserve. So any sort of pops or drops, I think, may be kind of temporary as the market kind of awaits, but the bigger moves could potentially come later on this afternoon. Now, depending on where you are, it's afternoon for me. It's in several hours, but 2 p.m. U.S. Eastern is when I believe things get going. Yep, in the press conference at 2:30. So that whole hour will likely be very volatile for stocks, for gold, for currencies across the board. But let me know, guys, what charts are you watching? Let us know. Someone says dollar bullish, gold bullish. One of you guys is likely to be right, and one of you guys is likely to be wrong, because likely a big strengthening US dollar is going to put pressure on this gold move. Like I said, from a price action standpoint, gold looks a little bit rough. Here's the 4-hour view. And you can see price kind of trending lower, putting in that lower low, lower high kind of series. If you're a bull on gold, you probably want to see the producer price index give you a little bit of some cooling that could, cooling, generally speaking, in the economy is any sort of disinflation trend is usually pretty good for the gold market. So we're going to basically watch to see if we get some of that today. And we're also going to watch when the Fed speaks later to see if they're kind of thinking, yeah, we're done with rate hikes. I think that's the real premise to watch for. Guys, we're in 50 seconds out here. So let me go ahead and jump over to the 4-screen. Let's see, we'll do 4 screens here. So we got gold top left. Let's do this. Let's just sort this out. We got about 30 seconds. We're racing against the clock here. We got the dollar index top right. These are all 15-minute charts, by the way. We'll keep gold in the bottom left, and we'll put the Euro USD here in the top left. So again, producer price index, guys, coming out in 20 seconds to go. Should be market moving, but remember, don't go anywhere. A lot of people leave right after the spike. The setups happen after the spike, so I never understand that. But here we go. We got breaking news coming in right after this. It always gives me a time to sip my coffee. So here we go. Producer price index. Let's see what we got here. All right. So gold initially spiking higher. Dollar index is down. Let's see, what kind of move is that on the dollar index? Nothing super substantial. Gold popping slightly. S&P is up. Euro also moving slightly higher. Again, not a remarkably big move here, but we'll take a closer look, see if we have the numbers in front of us. Okay, so core wow, look at this. So producer price index month over month came in as expected, but the core PPI came in lower than expected. This, again, I would say, supports the overall disinflation consensus, which is already in place. Let's be clear about something. Markets are already expecting disinflation. However, this is more good news, but you have to be careful because it's actually kind of in some ways bad news. It's confusing, but let me try and break this down. We want inflation to cool, but we don't want it to cool too much, because if inflation signs are like rapidly cooling and jobs numbers are worsening rapidly, if that happens, then you can start to get concerned about recession side of things. But I don't think that we're there. I mean, this is a cooling number here today for producer price index on the core side. That is a good number. That's a good print for right now what the market wants to see. And when I say the market, I'm talking specifically like equities and S&P and stuff. Same with gold. These markets, the two downside here and the euro, if they're going to strengthen, they want to see the dollar weaken off of the back of more cooling inflation. So gold is making a push higher. We're at 1986. I mean, still, this is kind of an embarrassingly low price compared to that pop that we got last week, right? But still, this is a good start. Let's take a look at the daily chart for gold. Again, doesn't really break out of this kind of disappointing price action here recently. I think that if you're a gold bull, you'll probably look to the Fed meeting later to see if we get any pops and breaks above. This is probably good for my pound dollar position. So I am, as I mentioned, I am long pound USD at support here. And so far it's looking it's looking pretty flat. I'm slightly in the red at this point. I think we have room to squeeze higher on the pound USD. And unless you get something incredibly hawkish from the Fed today, I think the dollar downtrend is still intact. Now, again, I say that lightly because we don't know what the Fed is going to say. I think that right now, the burden is on the dollar bulls. And I'll say it this way. When I say the burden, right, during this period of time, the burden was absolutely on dollar bears. What do I mean by that? If you're a fundamentalist, there's 900 people in here. If you are an aspiring fundamentalist, do me a favor, smash that like button on the stream here. Let me know. I do look at the like count very frequently on the videos to see if people resonated with something I said. Today, I'm asking you a question. If you're somebody who sees yourself either already being a fundamentalist or an aspiring fundamentalist, meaning using the real market moves, the real market drivers to help spot potential in the markets, if that's you, like the stream right now. Let's see if we can get that like button. I will look back later to see how many people liked the stream. So let me say this really clearly, okay? During this period of time when the dollar was in this uptrend and inflation was running hot and expectations were, where are the end of these rate hikes coming? Or at the very least, are they going to just stay higher for a really long time? Well, the burden was on the bears to produce cooling inflation. They needed to see something. They needed to, there was nothing to tell the bulls to chill out. The bulls just kept going because it was like higher for longer, rate cuts are not coming anytime soon. Then we started to get it. And that's where things shift. Now the burden, I say, is on the bulls. The burden is on the bulls because the market is seeing disinflation. It's seeing economic cool down. This is what the bears wanted to see, and it's what the bulls absolutely did not want to see for dollar bullishness. Fundamentalists in the room right now, if you think that there's upside for the dollar, then to be truthful, if you're right about that, the risk reward is great, right? If you think that the Fed is going to tighten up and say we are staying at these rates for much longer than people think, people are getting way too optimistic way too soon about rate cuts. If that's you, then I would agree that the upside is very steep for potential dollar bullishness if you're right about that, right? Now, I want to point out something. I think that the consensus is the consensus for a reason. We're seeing economic slowdown overall. Inflation numbers are cooling. We saw more evidence of that here now. But at the end of the day, we have a really good point here in the audience. Dan says that the reaction to PPI could be muted this afternoon from the FOMC. Okay, so we have a statement later. We have a press conference later. That's a wonderful point because the market's reaction to these numbers are the market's reaction. But what about the Fed's reaction? Do they have sufficient signs of cooling to cut rates? Some people, some of the very, very, bulls out there, the real strong bulls, were thinking that that March rate cuts were possible. Yesterday, that kind of got priced out of the market a little bit. Now I think expectations are May or June. And so we're kind of seeing that play out. You can see that if you're really interested in the fundamental side, you can always take a look at the yields market. This is always an interesting world to dive into, and you can get really, really lost in there. But let's talk a little bit more about some of the other markets out there here today. Again, euro is finding support, it seems, at 1.075. You also have pound USD, as I mentioned, the trade that I am currently long on. I'm also long S&P 500. Doesn't seem to be phased too much today by this PPI number, which actually, like I said, is if anything, it's kind of cooling. But I want to show you something. Again, to the point that was made in the audience by Dan, this concept here. Look at this. This is the market likely just waiting for what the Fed has to say following, the CPI number that we had yesterday. So whether you're trading gold, whether you're trading euro, whether you're trading pound, whether you're trading futures, whether you're trading commodities, later on will be an interesting story from the Fed to see if they give us anything. I don't think in terms of decision, right? They do have a decision to make in terms of their Fed funds rate. This is almost certainly, very close to certainly, going to just be 5.5% as expected. It's not expected for them to cut right now, not expected for them to cut in January, February, March. March is kind of a battleground, but mostly it gets more possible from there. Now, at least that's current projections. The question will be, and we'll get some confirmation perhaps, is in the press conference and the statement that will follow. So keep an eye on that. We will be streaming for that event. As I mentioned, guys, let me just remind you, if you don't want to miss a stream, hit the thumbs up button, first of all. That's super supportive of our show here. But then also, if you would just hit the subscribe button and notification bell, we'd love to have you come back and tune back in. It's the best way to get notified when we go live. Rate pause, but Powell will likely push back on early cut expectations based on bond market yields, in my opinion. Happy to be wrong, though. Dan, that's a wonderful point. And yes, I think, knowing Jerome Powell and just any Fed official, this is what I would do too. I would totally talk down expectations. I don't want the market to get ahead of itself, but obviously I am not Jerome Powell. So he definitely has his own plan of action that we'll have to watch and see. All right. So again, S&P 500, I am still long. Like I mentioned, we are floating a very nice trade here, but the question is going to be if we're going to be able to stay in this trade. I do have my stop loss trailed here on the daily chart. I'm using this market structure at 45.90 as kind of my line in the sand to trail this trade. I've been in this since the beginning of November. Seasonality got me into this trade. Seasonality is keeping me in this trade. Let me show you what I'm talking about. I'm going to pull up the Edge Finder. I'm going to go over to the S&P 500 here. I want to show you guys something. Seasonality is a remarkably simple but powerful indicator that I use all the time. So this is not magic. This is not a secret formula. And I always like to jump in front of my own, statements, because you never know when someone brand new to this stuff is walking into the show and they're like, oh, so I just got to blind copy seasonality. I'm going to make $1 million. It's not that easy, but it can be a nice confluence indicator to use in your trading. So let me show you. In November, I bought the S&P 500 on a technical breakout in combination with wonderful seasonally good timing in the markets. Okay, what do I mean by that? In the month of November, on the last 10-year average, we have seen the S&P 500 move up by 2.76%. Now, if you're somebody who trades gold, or you trade GJ, or you trade Euro Yen, then just use the Edge Finder and scroll to whatever chart you want. We have all the seasonal data packed in. Just click seasonality, select your favorite chart, and you can look at this exact chart too. Okay, if you don't have it, real quick, I don't think we have any reps in the office right now, so let's do this. If you would like a copy of this, I'm going to actually, Chandler, if you don't mind, just drop in the link to the Edge Finder page, just a1trading.com/edgefinder. If you put that in the chat here for anyone who would like to check this out, we do have free trials available as well. You can now get that off of the website. Please note there is a wait list for that, and we have a lot of people who are asking for it. But if you'd like to get in the wait list, then feel free. We're going to drop that link here in just a second. So let me just show you. If you do want to get a copy, actually, you know what? I'll come back to that. Let me finish my point. Okay, S&P 500 last 10-year averages 2.76% in the month of November. Now, this isn't shown on this screen, and it would be cool to get it going perhaps for next year. Next year, we have an election year in the U.S. Did you know that the stock market seasonally, some of the best time ever, is in the last year of a presidential term in the month of November and December? Wait, that's this year. Ta-da! That's part of the reason that I went long S&P. There's no magic there, and it wasn't a holy grail, YOLO all in on the account trade. It was simply probabilities. I liked the trade. We had a technical breakout, and I took it. And I've ridden that trade the whole time. But think about why that is. If you were the president of the United States, which maybe some of you guys, someone out there may be someday, probably not me. I don't want that job. The 2.7% average probably boosts up even a little bit more. I don't have that data in front of me, but on a fourth year of your election, wouldn't you want the stock market to look pretty good ahead of your next election phase? This is not tinfoil hat stuff. This is straight up what anyone would do. If you were the president, you'd be saying, oh, I'm about to try and get reelected. And all these people with 401ks, if they have a crappy looking 401k, then that's not going to be good. By the way, I learned recently from some of my UK friends that word crappy is kind of a curse word where you guys are from. Really weird to me. In the US, it's not that way. But anyways, random point. November, again, hot month of the year, fourth year of a presidential term. Very important stuff. And so we went long S&P. I mean, when I say we, Frank and I both, Frank is my trading colleague. We've been trading together for a long time. We shared the full thing in our Discord. And again, the shameless plug, we shared the entire trade from start to finish within our Discord community. And if you would like to get those notifications, you can come join us. Highly, highly recommended. If you're looking for serious traders, looking for serious community to join, then please feel free to join us. Yeah. The information for that can be found on our website, a1trading.com/VIP. And yeah, so seasonality is powerful, guys. I mean, that's the thing. It is not the holy grail, but that's why with the Edge Finder, we don't look at any single piece of data. We combine it all, right? At least all the things that Frank and I, the designers, really find valuable. COT, retail sentiment, seasonal trends, the trend in terms of momentum, right? Price action trend, economic output, inflation, labor statistics, and interest rates, right? We look at all those things and we consider them, or the algorithm considers them and prints out a bullish or bearish general bias. So that's the idea. Again, big news here later today. We do have the Fed funds rate, economic projections statement, and of course the press conference that will be happening in several hours from now. It's going to be very market moving. We will be live streaming and reacting to the press conference. So make sure to come back and watch during that time, as we will be hanging out on the stream to react to that. So S&P staying long. Dollar yen, an interesting trade. I think Frank actually went short dollar yen, I do believe. We could go spy on Frank if we wanted to. Let's go look. Let's go look, see what Frank has to say for us. Yes, so he went short dollar yen. This was right towards the end of our workday. He went ahead and shorted UJ, taking a short on UJ after today's performance on the one-day chart. CPI suggested weakness in the US dollar. As the benchmark declined further year over year, the pair has seen a bit of a rally early this week. However, it remains in a downtrend with indices doing well today. The anticipated pause in rates tomorrow from the Fed and today's expected CPI, things look dollar bearish to me. Lots of selling pressure and high volume selling for the past few months as well. So Frank is not here to defend his position on camera, but I'm sure we'll hear from him pretty soon. Yeah, so dollar yen. I mean, when Frank said I like that that he took this trade, I said I like it right away because I was like, I think dollar yen. We've talked on and on about this, how dollar yen might be an interesting one because here's the thing. The yen has been so beaten up for so long, and that's not a reason in itself to go long the yen. But one of my opinions here, and Frank and I discussed this at length earlier in the week, is the yen has been kind of trending lower so much. I'm sorry, yeah, it's been weak so much because they've consistently stayed in the negative interest rate for a long, long period of time. And they're now kind of talking about getting into the positive area or more positive area, right? Like 0.5%, I think they even mentioned. If that happens, that's a huge shift. Meanwhile, over in the Western side of things, the US, the Bank of Canada, the Bank of England, the ECB, they're all talking about rate cuts, or not necessarily rate. They're not talking about it, but markets are anticipating that they're going to start considering rate cuts. And if you're a currency fundamentalist, if you're an FX trader, this is specifically for you. You've got to look at the central banks of these two places. It's really important because if the Bank of Japan, the BOJ, right? The big BOJ, if they're talking about raising interest rates, we know that that is usually very bullish for a currency. Meanwhile, the US, all the rave is right now talking about rate cuts, right? So you look at those two things, you say, oh, that shifts exactly to the opposite of what it used to be. Dollar was rate hiking, yen was just staying flat. So I think that this supports, for the time being, kind of a downtrend in the dollar yen. You look at a technical basis, it's showing real signs of potential reversal as well. Now, again, the cool thing about the fundamentals is that if you were watching this fundamentally, we had signs of this even back up in these areas, that things perhaps were changing with the Bank of Japan's outlook, and the Bank of and the U.S. central bank, the Fed, seemed to be flipping scripts. So that's the cool thing about fundamentals, is that if you look only solely at technicals, you probably get late to this move. Whereas again, fundamentals were very, very leading in some ways to this move we've been seeing going on in dollar yen. So I think that's worth mentioning. In a moment, we're going to be bringing on Kenzo from Extra Hot Forex. Always good to talk a little fundamentals and charts with him. Again, Frank is short dollar yen. I do kind of like that idea. I'm still long S&P 500 as well as pound USD. My pound trade is just slightly in the red. We'll see how this one goes, but we've got positions all around going up today. And again, we will be trading throughout the day inside of the Discord. Real quick, if you guys want updates throughout the day, make sure to join our free Telegram. We'll drop the link here in the chat. And now we're going to take a quick break. Then we're going to be back with Kenzo here. Kenzo and I are going to take a look at some market setups following PPI. So coming right after this. Check it out.
The holiday season. Many people think it's the most wonderful time of the year. While everyone's out and about, grabbing gifts for loved ones, don't forget to get something for the most important person on your list. You. Yes, get something nice for yourself. Get yourself the gift of a premier trading software and community by signing up with Eightcap. Eightcap is in the giving spirit because they're handing out the A1 EDGEFINDER 100% for free. In order to join in on the holiday fun, just create a trading account with Eightcap. And if you stuff your account full of funds like a stocking over the fireplace, you'll get access to the EDGEFINDER and our trading Discord. So don't forget to give yourself a gift this holiday season and sign up with Eightcap using the link being dropped in the chat now or in the description down below. Don't get put on the naughty list. Trade with Eightcap.
Okay, and we're back with Kenzo. Hey, Kenzo, how you doing?
I'm doing great, thanks, and you, man?
I'm doing well. And Kenzo, we had today the producer price index, which followed yesterday's consumer price index. So now we've got a good bit of inflation data that we've got this week, and this is, of course, ahead of the FOMC rate statement as well as the press conference that will happen later on today. Kenzo, what do you think about all of this inflation data that we've gotten? And what is your outlook on markets here as they trade higher ahead of the Fed speak?
Yeah, I think CPI and PPI, or all the economic news that we had this week, they all point the weakness of the dollar. So it's obviously, I see the slowdown of the dollar, which is good. So I think today, obviously, they're not going to increase the rates, but on the conference side, I hope Powell will maybe mention about rate cuts or something like that. That will be good for the market.
Yeah, and you know, to your point about dollar weakness, it's been you know, actually kind of an interesting one this week, because what we've got here, this is the daily chart, and despite what, you know, you could argue is kind of cooling inflation data, it's somewhat muted in terms of price action response, just because this is kind of what the market has been calling for. But what do you think, Kenzo, gets us to roll over here? If you know, you and I are kind of in the dollar bearish camp, what gets us to break out there? Is it purely just a technical delayed reaction to all the fundamentals this week, or are the markets just waiting to see what the Fed has to say before making a move?
Yes, I think the good thing here, everyone's just waiting for the conclusion. From CPI, from NFP, the best conclusion is going to be FOMC. So I'm hoping for good news. Maybe that will happen. And if maybe they go into, let's say, obviously, I think they're going to post the rates, but any clue about cutting the rates sometime along the way next year, that will be a good thing. And we might start to see a continuation of the sell. I think technically, the structure actually is telling us that we are on a downtrend, but you can see that we lack a push. We need some push, some momentum to push the market to continue. Unless if he say whatever he want to say, I don't really see it pushing aggressively high. If it does, maybe it will end up coming back again, because interest rates is another thing. Yes, they control the market here and there, but 90% of the economic news, they all point down. They show the cool off of the economy. PPI, producer index, it shows that things are not going as fast as before. So obviously retail sale is not going to be good. CPI, we saw a slowdown, even though we had the other one went up with a 1 point, but that is not really crazy, or maybe it won't make anyone to panic. That's why the market did not really move that bad. Another thing you saw on the indexes, you saw like Nasdaq, US 30s, they were all enjoying CPI. Obviously, they expecting something to happen because they enjoy a lower interest rate. So obviously, they expect the market to go even lower. And that, I think, it might happen. I think today it might be a very good time for us to start with a very nice trend.
Yeah, and I think, Kenzo, another thing that's worth mentioning is that when we see these inflation numbers coming in cool, you had CPI yesterday, came in at, it came down, but it didn't come down. Some people were hoping for like 2.9, that sort of thing. I think in some ways the market is actually okay with this slow cooling, because it does start to, we've talked about this many times, but at what point does bad news, which, is arguably economic, cool downs, at what point is bad news bad news? And I think that, if you get cooling inflation that's very mild cooling, that is not necessarily devastating to the market, right? So mild cooling allows the Fed to take off their foot off the gas and pump the brakes a little bit on all the rate hike stuff, and perhaps even look to move further out of the picture. So I think that this inflation number was just right. I mean, we had jobs numbers that were relatively strong last week. You have inflation cooling in line with expectations. That's an environment where stocks seem to do just fine. You also have, of course, packed onto that, and probably worth mentioning, that fourth quarter bullish seasonality in a fourth term of a presidential election. I was pointing that out earlier in the show. You add those things together, I think you have a good rally to the end of the year. I've been very, very clear about that. You and I have talked a lot about that, Kenzo. I know you've been predominantly bullish on indices as well. So I think that for now, the case for higher equities markets is still intact. And I think, perhaps there's a little bit more of a battleground as you go into the new year and we get more live Fed meetings, right? Because right now, Kenzo, expectations of the Fed today are to do nothing and to probably try and sound a little bit hawkish, but most likely, what I think the bulls need, if you want to get more squeeze on the indices and gold, if you want to see gold here rally today, if you want to see the indices rally today beyond what they've already done, you need something meaningful. Because look at this market. The NASDAQ is up tremendously high. S&P is up tremendously high. Gold, not so much. But the point is, in order for you to get a good size, continued push higher on all of these things, what you probably want to see is the Fed solidly say that rate hikes are done. And they're probably not going to say that. So again, that is, I think, the game plan here for today's meeting. Well, is there anything you want to add or think differently on?
Yeah, no, you are correct. And on gold, I think one way or another, gold will have to catch up. We know that sometimes it might take time for it to catch up, but most likely it will end up following what we see on Nasdaq and US 30. So on the news side, I'm not really like on the CPI. You saw the numbers were not really impressive, but that's what happened. Last month it was aggressive. So this month won't be aggressive like maybe last month. It not really go down. So even next month, I don't really expect some crazy numbers. I think the market will start to go very slower. I mean, they see all these numbers of economic news, they will start to go slower. But what I like is when FOMC comes, as long as they can signal that, you know what, maybe we did not really reach that 2%, But obviously, I don't think they will be increasing any rates, and that is also a good sign. If they
Yep.
pause the rates where we are now, it's also a good sign because inflation is going to go lower, and they will be forced to cut the rates when that happens, when it's a good time. And I don't think maybe we'll try to mention anything about cutting the rates, but we know that the numbers are telling us that there is a possibility for that.
And I think what's worth mentioning too, Kenzo, is that if you look at the daily chart of gold and the daily chart of the NASDAQ, it tells two different stories. Both have seen good overall price appreciation. Here's gold, here's the NASDAQ. The difference though, why is the NASDAQ up so much? It's because it seems like the Fed so far, the consensus now, and it was not the consensus for a lot of this year, consensus now seems that a soft landing is doable, that it's possible. And so that drives equities just crazy higher. Now, does that also drive gold higher? Kind of, because the dollar likely will weaken in that scenario, which is good for gold. But remember, if you wanted to see the opposite, if you wanted to see gold screaming higher and NASDAQ, mildly higher, but not as much, then that's more of a economic data is rapidly falling down. And there's a concern about recession fears. That would, in that case, that would be where gold really flies. So if you're somebody who thinks that gold is going to rocket higher, we talked about this yesterday. Ivan and I discussed this idea. What do you need for gold to get there? You probably need recession fears to creep in, a real disinflation fear to come into the picture. Or not, deflationary is very, very far out there. But, the idea being if you've got a real slowdown in the economy data, like meaningfully fast, that could get really, really bullish for gold. So it's an interesting point to make, I guess, in terms of the comparison, both of these things appreciating on a weaker dollar, but one doing far better than NASDAQ, the S&P, the Dow, et cetera. So what do you think about gold, I guess, Kenzo, as we end the year? Any thoughts on gold specifically? I mean, price action has been a little bit strugglesome here. What do you think?
Yeah, on gold now it's a bit confusing. So the best thing that I can say maybe someone can do is to also, for those who actually know, they can also check maybe treasury yields, 10 years, 30 years, because they can actually show if maybe inflation is around the corner. But for now, we don't really see much, and that's why we see some crazy structures. Now, I think the market is just consolidating where we are. But I think the best thing that is going to dictate these moves after FOMC, I think we're gonna have a bigger picture what is going to happen. I don't think there's any other bigger economic news like that than FOMC that will give us a bigger picture. So at the same time, we have a weaker dollar, so a gold it's supposed to push up. You see, so I think maybe it's just maybe actually a ranging structure waiting for proper results before we see a push. I don't think we're gonna see a crazy sell off. I don't think so. I can't say we also have geopolitical news, but I don't think that they will fuel gold to actually push lower. I'm expecting to see the market to push up. Dollar it's weak. We have geopolitical news all over the place. So we have so many reasons to say why we say maybe gold can push the upside. On the Nasdaq side and the other ones, I can say it's simple. If you checked maybe companies which are in Nasdaq, Amazon, Tesla's, they were not actually performing very well. Some they missed their estimates, but there is this move pushing to the upside. Obviously, we're expecting something to happen, which is the rates. So I think gold will catch up, and gold is very fast. It can still move very quick within a day, and it can create some very nice momentum. Unfortunately, we might miss that because it will just happen. Maybe it will relax when we forgot about it, then it will just shoot.
Yeah, no, and that's a good point. I think just to narrow in on what you're saying about gold here, I've got the 4-hour chart pulled up, and I think what you're saying I think makes a lot of sense. You've had this recent price action downward trend, but generally speaking, I think the fundamentals make sense for upside on gold. But I like what you're pointing out with a potential wait for that breakout on the technical side. So I would say that as you watch FOMC today, if you do get meaningful breakouts the other direction, like strong, above 1990, or perhaps if you're more on the conservative side, looking at like 2000, get us back above 2000. It could be, like you said, now that the market is waiting for FOMC to kind of conclude. Once that's out of the picture, maybe that's where the push higher for gold can take place. So we've had a lot of inflation trend data that has continued, or inflation data that has continued to support the disinflation trend. And that idea should be bullish for gold, in my opinion. So the question will be, like I said, can we get those technical breakout higher on gold as we go into FOMC? So I like that. And to your point about data, this is pretty much it. Today we have the FOMC, and then we have several days where we don't get a lot of market news. So we'll see. I think that could be, to your point, the idea being, okay, well, now that we've concluded the news and we have a little bit of a runway where this disinflation can just kind of settle into the market and the market can trade around off it, I think that leaves some room for gold to go up, and we'll see how that plays out. Now, again, in the audience, let me just clarify something. If you're a newer trader and you hear Kenzo or I be bullish on gold, that's not a certainty. That is not a perfect guarantee that the markets are going to go higher. Nobody knows with certainties what the markets are going to do. Otherwise, we'd all be trillionaires. But the point is, the idea is we look at probabilities, we look at all the data that we possibly can, and we try and make educated guesses, essentially, with good risk management. So I like, Kenzo, I like your idea on gold. Let's see if we can get a break. I like the get above 2000 mark. If we get a pop today on something that is said, something that gives us a little bit of a runway, I'm happy to not necessarily be the first one to buy it. I'm happy to pick it up on a pullback, see if I can catch it there. So good stuff there. What about on the currency trading side? The dollar has been, like you said, the downtrend seems intact. Any specific currency pairs? I have pound USD long. Do you have any trades or things that you're considering on the currency pair side?
Yes, I've been looking at GBP USD, Euro USD also, and the other ones, I think it was USD JPY. So yes, I've been actually long on this pairs.
Oh, nice. We got the same trade.
But we have this smaller push. Come again?
We've got the same trade on then. That's awesome.
Oh, okay. So I see that the market is still struggling around this area. So CPI yesterday tried to push the market to go up a little bit, but we saw another reversal. But it seems like the market is creating a very nice support around this area. Maybe I'm expecting the market to just consolidate until maybe around FOMC, maybe before we see a very nice shoot. But I checked, I think this week we also have interest rate from GBP and Euro. So
yes,
we will see what will happen. But I'm still expecting to see a very nice push on this structure. So on the other one, it's also Europe, Euro USD. I'm bullish, but the market is still very slow. So I'm expecting just to wait and see if maybe we will get a very nice push to the upside. So I've been actually following DXY. So whatever the dollar is doing, I'm just following the trend.
Okay, fair enough. Yeah, I think it's cool to see we both kind of have that idea on pound USD. You mentioned dollar yen. I know that also I did pull up just to confirm. We do have December 14th. That is tomorrow. We have the bank rate from the Bank of England. So you are correct about that. So we should see some volatility on the pound likely to follow, not only today's volatility, but tomorrow with the Bank of England. I wanted to ask you about dollar yen because I know Frank, Frank, he's on the show frequently. Frank is short dollar yen. He shared that inside of our group yesterday, and I think that trade's starting out well. Are you bullish dollar yen, bearish? What do you think on UJ?
Yeah, I'm bearish. I'm bearish. I actually had a sell yesterday, but the market is still playing games. So maybe later on we're gonna see the market pushing even lower. I heard you were talking about yen, JOB, Bank of Japan, whatever. trying to, maybe they will be increasing the rates, and other economies are now trying to increase. That can give us a very nice momentum. Plus, besides that, if we go on the technical side, we can see that the market reached the highest level here. Also, this area is the highest level. And since the market touched this area, we can see that the market actually pushed even lower. So there is a possibility for the market to also do the same thing, because you can see the market was coming from the lowest side, reach this level, push the lowest side. Maybe it's a good time for us to look for a sell on USDJPY. I think maybe that might continue selling. So yeah, but the market is bit very slower, but I'm expecting that it's because maybe of FOMC. So yeah, we will just see what will happen later on.
You know, it's one thing also to point out, I think that's very interesting, is if you look at the 2-year yield crossing it against the dollar yen, this is an interesting chart. Generally speaking, these two things move in the same direction. And while I don't have USDJPY short, I've talked about on the stream how I've picked up a lot of corporate and government bonds over the last few months, which in some ways, if you think about it, right, if you're buying bonds, you're essentially shorting the yield on bonds, right? So I did that. I was much too early and also added some over here. So while I'm not necessarily short dollar yen, in some ways I have the same concept by being long some bond ETFs. So I think it's kind of interesting and worth pointing out that the 2-year yield typically moves in the same direction as dollar yen. At least that correlation has held up for, you know, over the years pretty well. So interesting and probably worth mentioning. So in some ways, I do agree with that consensus. That trend seems to be sustained, and I like it in the bond side as well. So should be interesting. I think just a personal opinion, but I think, you know, this has room to fall, and with that yields continue to fall, that would be my bias. And so part of the reason I'm very, very bullish on indices, but the other part is or my other bet on that is some more conservative kind of bond ETFs that I own in my own portfolio. So just kind of worth mentioning. Kenzo, I want to say thank you for coming on the show. If you are not already following, for audience members, if you're not already following Kenzo on YouTube, highly suggested for you to do so. We have his YouTube channel linked here. We're dropping it in the chat right now. If you do not already have him, again, on your YouTube subscriptions, make sure go subscribe to Kenzo, Extra Hot Forex here on YouTube. Plenty of free value if you're somebody who's looking to learn. If this is one of your first shows with us, make sure to subscribe to this show, but also definitely subscribe to Kenzo. Check him out. Find him on Telegram, Instagram, wherever you can find him. All of that should be on his YouTube channel. Kenzo, thank you very much for coming on the show, man.
Thank you very much, man. See you next time.
See you next time. Always good to have Kenzo on, guys. Again, very, very knowledgeable guy about both fundamentals and technicals, and that's why we have him on the show. We're trying to bring on more and more contributors to this show. This is, at this point, very much a community built show. We bring on people that the crowd frequently asks for, but we try and bring on people who have really good understanding of the markets, because I think, you know, our goal with the show is to bring on people who add a lot of value to you guys' day. At the end of the day, the dream here, the goal of the A1 Trading Show is you tune into this show and you are learning something every single day from somebody who is quite knowledgeable on the subject. And while I've been doing this for a long time, I'm also aware enough to recognize that there are people who know more than me. There are people who know more about other things than me. And if I can bring them on the show to add something to you guys' day, then that's a win for all of us. So if you support what we're doing here, here's a couple things for you to consider. Number one, hit the thumbs up button, subscribe. Number two, join our free Telegram. We're going to drop the link to our Telegram here in the chat while we're live streaming. And if you're watching this back at a later point, you can click that link that's in the description to join the Telegram. Totally free to do so. We have analysis being shared, updates about the show, schedules, things like that, all being shared inside of our free to join Telegram channel. We are trying to become the #1 best source of information on the internet for people who are looking to learn to trade totally for free, no paid courses. We do offer services, and we are a software company. At the end of the day, to be fully transparent, the way we make money is we sell software copies. This stuff is not free to run. We have teams of people behind this. So if you're somebody who would like to support us and you would also like to get some premium software, we got a Christmas discount going on right now. And to get information about that, let's do this. We will drop the Telegram, the Talk To link, Chandler, one time here. If you'd like to get Christmas discounts, shoot us a DM on this link. If you click this, it'll take you to a spot where you can chat with a rep on our team to get a Christmas discount. You'll also be supporting the stream, but more importantly, you'll get our premium product. We are a software team out of Atlanta, Georgia. We build software that helps traders level up their game. So if you'd like a copy, click that link. We'll get you a super big discount for being a stream supporter. Thank you very much for tuning in. We'll be back later today for the Fed meeting. We're doing this all over again later on today. So join us then. Thank you guys for watching. Over now.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through our daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And yes, I'm Santa and I work for A1 Trading. Don't ask any questions. Now get lost because I have some presents to deliver. I'll see you all at Christmas.